Good afternoon, everyone. Hope you're enjoying the conference so far and had a nice lunch. So, to, my name is Joanne Chiu. I'm the founding partner of Kreit and Chiu CPLP. So we are global PCO. We're a global accounting firm. We're PCOB registered. So all our partners from I speak for, we have clients. Half of our clients are in U.S. and half are in Asia. So that's why I'm on moderate. I'll be your moderator of this panel. So my partner Stephen Kreit used to run Eisner's neo audit practice, and we can serve clients in both Asia and U.S. and mostly 95% of our clients are public companies or companies are looking to go public in U.S. And so without further ado, I'd like to introduce you to our panelists so they can, maybe talk a little bit, Keith, talk a little bit about your background, your experience before we start the panel.
Thank you, Joanne. My name is Keith Wong. I am with Three Forces, and as a matter of fact, we are a presenting company here. The one that's coming up is at 4 o'clock today. So I think the reason they invited me to participate in this panel discussion is I have done, prior to the pandemic, I have spent over 10 years in the China space and Hong Kong as well. And I did a couple deals and exited as well. But doing deals actually was not my main job. My main job was running my own business. And like right now, I'm running a startup software company. But I would like to help wherever possible in this discussion here and share my experiences with doing deals in China, in Hong Kong, and Philippines. And I know a little bit, not that much, about these other ASEAN countries. So I hope I can contribute something here.
Great, thank you, Keith. Hi, thank you, Joanne, for including me in the panel, and thank you, DealFlow, for inviting Freedom Capital Markets to be part of this panel. My name is Rob Wotczak. I'm the president and CEO of Freedom Capital Markets. We are a boutique investment bank, started about 3 years ago in New York. We are focusing largely on micro-cap, small-cap issuers in a cross-border global way. Our parent company is a public NASDAQ company called Freedom Holding Corporation, about a $5 billion market cap company. Again, a global financial service company with presence in 16 countries and growing. Also very involved in cross-border. And previous to me, joining and starting up the U.S. operation for Freedom, spent 13 or 14 years in stock exchange world between New York Stock Exchange and American Stock Exchange, doing a lot of cross-border listings in Europe, in Asia, SPACs, up listings, you name it, I've been involved in those types of listings. So again, thank you, Joanne, for including me and Freedom into this discussion, and certainly look forward to answering some questions and creating a dialogue with the audience. So thank you.
Thank you. So as we all know, U.S. is the #1 economy of the world. And according to the World Federation of Exchanges, U.S. is also, as we all know, owns the largest of the world's stock market shares. So we have the New York Stock Exchange and the NASDAQ are the top 2 among the world's ranking. And now we also have CBOE, the Chicago Board of Exchange. Is not the top 3, but it's part of the U.S. exchange where you can trade stocks. So so there are approximately 80 stock exchanges worth combined of $110 trillion of market cap companies. So trailing NASDAQ would be the Netherlands, Shanghai Stock Exchange, Japan, Shenzhen, and Hong Kong. That's why today we have this topic discussing U.S. versus Asia and also European countries. Mm-hmm. So in order to give everybody an overview, of the differences, we'd like to start the question to discuss what are the differences between U.S. markets and versus Asia and Europe in terms of regulatory and other differences you are aware of. Keith, you want to take that first?
Yeah, I think one thing that stands out a lot is just the size. And the U.S. market is very wide and very deep. Like, for example, you mentioned these U.S. exchanges. If you just add up New York Stock Exchange and NASDAQ, we are over $50 trillion. And the whole world only has like 110 trillion. So we are more
Yes.
than almost half
Almost
of that
half,
already.
yeah.
And then as big as you think, like Shanghai Stock Exchange, it is not. It's only like 8 trillion, but recently actually has gone even lower.
Yes,
And
6.7 as of August
Okay.
2023. Probably
Okay.
lower now.
Okay. Yeah. So by large, this is definitely this is the promised land. All over the world, every entrepreneur will come to reach this promised land.
Yeah, no, I agree with that. Look, obviously, the U.S. capital markets is the epicenter of the global capital markets. And I think purposes of this discussion and in the arena where we all travel in the microcap space, the ecosystem has been in place here for many, many years. As I said, I've worked in stock exchange world from early 2000s, all the way through, mid, 2015, 14, 15. And, what you have here is not only the investors, retail and institutional, but the entire professional ecosystem around it that really embraces and I would also include Canada in that to be honest with you, because
Yes.
North America with some of the junior exchanges in Canada as well. I think that the North American, U.S. and Canadian exchanges and ecosystem around it are just better suited to facilitate these types of companies. And I think some of the statistics that Joanne and Keith just rattled off, I think lend real credence to that, because in those other markets, I just think the ecosystem is not there. So I do believe strongly that as the capital markets evolve, small cap, micro cap companies will continue to look globally to the U.S. to do their public listing. And again, anecdotally, having worked in stock exchange world and been involved in hundreds of bell ringings and hosting them, it really is, in essence, for most of these entrepreneurs and CEOs, a crowning achievement of their entrepreneurial and success journey when they come and do a bell ringing at the NASDAQ or the New York Stock Exchange. So I think, there's no reason to believe why that will not only continue to manifest itself as we move on here.
Yeah, I totally agree. Like if you look at Hong Kong Stock Exchange, for example, most of these big issuers are invariably related to real estate, and China as well. China, usually these state-owned enterprises. So it's very difficult for a private company to get enough attention on their stock. And then I think we are so creative, like SPACs, for example. I think we have had SPACs in the country over 15 years already.
Correct.
And to give you a perspective, Indonesia just started a SPAC. They just approved it like 3 years ago. So we are very innovative here.
Yeah, I also just think with all of the exchanges, you mentioned SIBO, which is a new player here, which I know in the previous panel it was alluded to the New York Stock Exchange and NASDAQ, frankly, have been, somewhat challenging towards some of these smaller cap issuers, and particularly NASDAQ. So, that I think creates opportunity for some of these other exchanges, OTC markets, SIBO here, and some of the three junior exchanges in Canada to also, play within the context of some of these listings as well.
Yeah.
Thank you. So can you talk a little bit about, the capital raise, between, the difference between for the microcap, the process, between, difference between Asia and U.S. and Europe?
Yeah,
Yeah.
I think here, I think, again, the infrastructure is such that there's a pocket of capital on the institutional side that is there and on the ready. And certainly in the last 6-9 months, we all know the tape has been very challenging in the U.S. IPO market for domestic issues and frankly for foreign issues that have come into the market. But like anything else, markets will always be cyclical, and I think there'll be a reversion to the norm. You know, as Keith alluded to, all these SPACs listed in 21, 22 and 23, the markets, corrected back, and I think 24, signs are definitely out there with respect to some of the IPOs that have come out and the filings that are out there and where this market looks like it's going. But I think, on both retail investors and institutional investors there are pockets of them here in the U.S. that have invested and will continue to invest in it. And I don't think that exists in some of these other markets around the world. I think that's why, the ecosystem is such that it's a natural inertia for these companies to want to list their companies, whether they're out of Europe or out of Asia, to list in the United States on one of our markets.
Yeah, so in Asia, one thing that strikes me a lot is that in the US here, we are more citizenship agnostic. We welcome everyone to come here to list. But I think if you try to do it in Asia, if you're a foreign company, it's rather quite difficult. They prefer these well-known homegrown brands they can recognize. And also the liquidity just is not there. So it's a lot of friction to go the other way.
I think, Keith, you bring up a great point there. I think, one of the things, the IPO or the listing is just, frankly, the beginning of the journey of their public life. And, having the appropriate aftermarket support for these companies, i.e. conferences like this where companies could come and meet investors, is critically important. Doing appropriate investor relations and those types of things where, again, the ecosystem infrastructure is here to help these companies post the event to, on their capital markets evolution and journey to help them be, a successful public company in the United States.
Right.
Yeah. From my understanding, the Shenzhen Stock Exchange, Hong Kong Stock Exchange, they have changed the rules, so it's harder for companies to be listed there. And also, their stock market is not doing that well. And this in Hong Kong, it's in half.
Very poorly.
Yeah. So, and especially for micro-cap companies, so they have a lot more opportunities here. So that's why I went to Asia like 5 times last year, and there's actually conferences around because there's tremendous interest of micro-cap company that want to list in U.S. So I went to conference in Singapore and Malaysia. I was invited to conference in Hong Kong. This year I'm going to conference in Australia and also in Vietnam. I'm invited to go back to China. And I also see increase actually in U.S. listings as well. So I do see that, going to have a better market this year.
I think there's a tremendous amount in the last 6 to 9 months. Members of our team, we've had 2 members of our team on Asia road trips, conferences, events, 4 or 5 times in the last 6 months, various conferences. I'm sure some with you, Joanne, and our team that have teamed up on certain endeavors together, which we appreciate. Thank you. But I think, the community here understands, particularly in Southeast Asia currently, the enormous opportunity, and people are looking for new and innovative ideas. And these countries are ripe with those types of opportunities. And I think our community has understood that and embraced that and have gone into that community and working with local advisors and local in-country professionals and capital markets professionals to educate. And as we continue to do that in a more substantive way, I believe that pipeline coming towards the U.S. and bringing new and innovative and differentiated ideas to this investment community will only continue. And I think that's a phenomenon that I think is, again, it's always has been there, but particularly in Southeast Asia, I think it really is super interesting for all of us. I had the pleasure a couple of months ago to be at a symposium at the NASDAQ with the Prime Minister of Vietnam, and had a chance to meet with him, chat with him, and what's happening in that country and other countries in that region of the world are frankly very exciting for us on the banking side, and, then that translates into the, excitement and the opportunity for our investment community and constituents to invest in these types of companies as well.
Correct. You said it right there, Rob. I was in the Philippines about a year ago, and talking to some of my friends and entrepreneurs there, it's very hard. They really want to recreate like a small Silicon Valley in Manila. And quite a few of these fintech companies, they are quite advanced. As you know, fintech company formations, they do not really require a lot of capital investment. It's mostly brain power, programming, that kind of thing, right? I could feel that, these young people, they are really determined, to do something great and to emulate what we have done in San Francisco, in California. So, and I think they're ready, as soon as they have proven themselves a little bit, to come over and talk to people like Rob, to get listed here on the one of the U.S. exchanges. So I can feel that it's coming, for the whole ASEAN regions, especially Malaysia, Philippines, Indonesia, Thailand, and then Vietnam. Vietnam is into more like heavy industry. Like I think one of their EV car companies was recently listed here, right?
And
VinFast, right?
Yeah.
Yep.
yeah, VinFast, and also Japan.
Yep.
I mean, Japan's economy's been doing well, so I heard there's a lot of Japanese investors here.
Yeah, I think that's fair to say, Joanne. I think I apologize for not mentioning that because one of my colleagues literally was in Japan three days ago. But yeah, I think it's funny that in the 90s, Japan to the U.S. capital markets was very vibrant, right? There's a lot of activity,
Yes.
and frankly, for the better part of the last 20 plus years, there's not been a lot of activity. But recently, a lot of the advisors, a lot of the events are occurring in Japan, and
Yes.
some of the smaller emerging companies in Japan are now, earmarking their capital markets activity potentially towards a U.S. listing as well.
Yeah,
So I
that's
think
why
that's a very exciting new market, not necessarily new market, but an emerging market to come back into the U.S. from a listing perspective.
Yeah.
Yeah, that's why we hire actually Japanese-speaking auditor already.
Wow.
That's great.
You're way ahead.
to get ready, because, it's important. What about the London Stock Exchange? What's your view on that? Do you think it's still attractive as a...
I think it's a little bit more
Public vehicle.
challenging, honestly, recently. I think Brexit happened, I guess a year and a half ago now. And I think it has bifurcated, London, which was the epicenter or the global capital markets, European capital markets head. And I think that you're seeing listings occur, and you mentioned Netherlands and some of the other European markets. And I think that's been a detriment. And in my past life, when I worked in the stock exchange world in the early 2000s through 2008, the London AIM market was, a hot market, and even we had dozens of U.S. companies go the other way because of Sarbanes-Oxley and whatnot. I think that phenomenon has totally changed. The market support in London, I think, for the smaller micro cap space has dissipated a lot in the last couple of years, in my opinion. And from when we observe, and we just had our parent company is headquartered in Kazakhstan, believe it or not, and there was a competitor was listed in London until just literally 2 weeks ago. It deregistered and literally raised over $1 billion a week and a half ago, called Kaspi, listed on the NASDAQ, raised over $1 billion with Citigroup, Morgan Stanley, and JP Morgan. So I think you see some of the lore that London had previously, I really don't believe is there anymore. And I think it's going to take some time post-Brexit for it to find its way back.
Okay, so U.S. is the market. I know a lot of investment banks from Hong Kong, because they actually cannot survive there anymore, so they're actually getting their licenses here in the U.S. Some of them already have their licenses, some of them are in the process. I know at least like a handful of them, and they're asking me, to make introductions of lawyers and they'll work with other bankers and so to help them out, get to know people here. So if any one of you need auditors or want to work with banks like that, they have deals from Hong Kong and Australia. They're putting together a conference with NASDAQ in Australia. That's one of the banker. So U.S. market's really hot for Asian companies. So yeah, you guys have anything to add before I open the floor to the audience?
No, sure. I think you covered it all well, Joanne. Happy to,
Yeah.
frankly, answer any questions that the audience might have about the topic.
Peter?
You talk about listing. What about dual listing?
Oh, yeah.
Yeah, the ADR stuff, because I think
Sure, yeah, that's
that's an opportunity that nobody thinks about. The companies that are already public overseas want to do dual listing because the amount of capital that is in the United States. How's that opportunity?
I'll jump in there. Peter, thank you for that question. That's a very good point. Look, one of the first 5 or 6 years of working in Exchange World, I covered Europe and worked extensively with the depository banks over that period of time. And I do think there's tremendous opportunity with companies that are listed there, particularly the ones that are listed in London with GDRs, where maybe some of the lore of London may have dissipated. I think those types of companies and smaller companies in general that have depository receipt programs that might be listed, I am a big proponent in general. I did it for many years of talking to companies and bringing companies into this market, into the U.S. market, with a secondary listing. And in most instances, what you tend to see is the liquidity tends to eventually come to the United States more than it would with the local home market. And when there's activity in a depository receipt, whether it's a GDR or an ADR, it creates actually liquidity in both sides of the pond, so to speak, in both markets, and it creates for a more vibrant ecosystem between capital markets participants on both sides of the world as well. So.
And actually, if you list it locally and if you list in U.S., actually, it makes you look better, right? So you actually gather more investors locally.
Yeah, I think that's a big part of it, Joanne. I think in most of these markets where these companies are listed, there's a ceiling on the capital markets, right? In the ecosystem that's there, and obviously, coming here with the population and the institutional investors and retail investors, it gives the company many different potential distribution outlets to tell their story and bring new investors and new pools of capital into their company.
Do we have time for one more question or? Okay. Anyone has any more questions? Seth?
I think many of us know about some of the other foreign exchanges like Canadian or Tel Aviv. I guess for Rob, I know you're active in other exchanges. Are there any other foreign exchanges you would recommend companies looking into?
It's a good question, Seth. I think what we're seeing, again, with Brexit and like London kind of, I think, being dislocated a little bit, I think you're seeing a lot of more capital markets activity dispersed in London. And I think what's happened in Hong Kong as well, I think companies are leaving the Hong Kong market and dispersing into Southeast Asian communities.
Yes.
I mean, us personally, our parent company, we started a stock exchange in Kazakhstan, where it sits between China and the gateway into Eastern Europe and continental Europe. And I think there's a lot of, and look, the world it's a smaller world we live in, right? And even look at SIBO, what they're doing. You can list on one exchange, and then you could trade in 4 or 5 other markets that they have globally. Strategically, I think that makes a world of sense for a company that wants to be global and access global investors. And I think that those types of opportunities will continue to manifest themselves as we move along here. If anyone wants to help.
Yeah, definitely. I just want to add one small note for China, which now includes Hong Kong. As you know, they are the same. But I think if you take a longer view, let's say 5 years from now, you don't know, you never know. It might come back around and then like be totally open again, back to the 1980s or something, you know. Everything is available. Even right now, you can go in there and start looking at some of these defective assets, for example, and they probably would offer you like a fire sale price right now. But the regime is not stable, obviously. It can happen. Anything could happen. So if you take it's just, I guess my advice is don't completely write it off and give it 5-year time horizon. I don't know, you might see something very different.
It is a big market, right? You can't just give
Yeah.
up. But some of the Chinese company, they're actually, dividing their companies that are outside of China into different companies. So they will become like an Asian company, a Japanese company, and go public in the U.S. We see a lot of those activities as well.
Yeah.
So that's the trend right now.
Yeah. Right now, everyone wants to get out. But maybe
Yeah.
tomorrow it's time to get back in again.
I think that's a great point, Keith, because I think we've all been through cycles, right?
Yeah. Right.
And, China is just too big of a player in the global economy. And, whatever your opinions are, the U.S. and China need each other, frankly, and I believe at the
Yes.
end of the day. And I believe that the vibrancy of Chinese listings coming back to the U.S., it's a matter of when, not if, in my opinion.
Yes.
Yes. Thank you, Rob. Thank you, Keith.
Oh, thank
Thank you, everybody.
Thank you, everyone.
We'll take a picture.